Assalamualaikum. Welcome to video 7 IAS 10 events after the reporting period. So here we are going to go through the definition of events after the reporting period. These are those events, could be favorable, could be unfavorable, which occurs between your statement of financial position date and the date when your financial statements are authorized for issue. Okay, there are two types of event. One is adjusting event, one is non-adjusting event. If it's an adjusting event, you have to adjust in the financial statements, and if it's non-adjusting event, you just have to disclose it if it's material. But how do you differentiate an adjusting event and non-adjusting event? See, in your exam, the key is to identify whether an event is adjusting or non-adjusting. Adjusting event means at the reporting date you will be having some evidence. Okay, so the evidence of condition will be existing at the reporting date. Events might occur after the reporting period, but there was some evidence that that condition could occur at the reporting date. One is litigation cases that is going on. Okay, so the case could go in your favor or against your favor after the reporting period, but that litigation was going on at the reporting date. It was there, evidence was there, so it's an adjusting event. Next, non-adjusting event. These are those where on the reporting date you have no idea. For example, a fire occurred, a tsunami occurred. At the reporting date, there were no such evidence that this event could occur. So these are non-adjusting. There were no evidence of that. Now, what is accounting treatment? Adjusting event, as the word says, adjusting, adjust in the statement of financial position. Non-adjusting, as the word says, do not adjust them. Okay. But if the event is material, then you have to disclose the nature as well as its financial effect has to be disclosed. Now, example 1. So let us see this example and see whether it's adjusting or non-adjusting. It's about a legal provision of 5,000 included in the financial statement in 31st December 2004. In Jan 2005, legal case is settled, resulting in actual cost of 7,500. It's more. This is an adjusting event because in 31st December 2004, you have recognized a legal provision. Okay, there was an evidence of that. So now you have to adjust it. How? You have to adjust your provision to 7,500. Example 2. In Jan 2005, company purchased 100% of shares of another company. This is a material non-adjusting event because no one knows whether you will acquire it or not. There is no such evidence at the reporting date. So it's a non-adjusting event which you have to disclose as a note in the financial statements. You do not adjust, but you write it. You disclose it as a note. So that's it for IS 10. These are the 4 questions you can do from your exam kit questions. Meheran, Colette, Rubel, and Wink. Thank you for watching, and I shall see you in the next standard. The next standard is a very important standard and is a technical standard, which is IS 12, your income tax. Thank you.